What's going on, guys? Rick FX here. Welcome back to my YouTube channel. Thank you guys for the support so far. We've been able to amass a total of 1.6k followers. I want you to keep supporting me by clicking on the subscribe button. Also turn on your post notifications so that anytime I drop a valuable content like this, you'll be one of the first people to watch the video. In this video, I'm going to break down one of my day trading strategies that I used to use back in the days. Now, when I say back in the days, I don't really mean it doesn't work anymore. Now, this day trading setup has been built around the concept of market structure and then turning points in the market. I'll break down to you guys exactly how you can identify a trend and then how you can apply it with this strategy as well. This strategy works on all pairs. I'm going to use gold for the example, but you can backtest it on all other pairs as well. So without wasting much time, let's get right into the video. So as you can see on my screen now, I have XAU USD, which is gold. The first thing you want to do is to go on a higher time frame and try to identify the structure or the general flow of the market. Now, the reason why this is important because you want to trade in direction of the market and then not against the market. And also, this strategy works best in a trending market. So you want to know whether the market is in an uptrend, whether it's in a downtrend, or whether it is consolidating or moving sideways, right? So for you to consider the market being an uptrend, you want to see the market make a series of higher highs and then higher lows, higher highs, higher lows, or impulse correction. And then for a downtrend, you want to see it making a series of lower lows, lower highs, lower lows, lower highs, lower lows, and then lower highs. Now, another thing I want you to understand is that once you identify this structure on a daily time frame or on the higher time frame, know that the market works on a fractal principle, in the sense that right here being the swing move on the daily time frame, when you go on a much lower time frame like the 4-hour time frame, you're still going to find out that it's made up of a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs, and so on and so forth. Same way when you go on a 1-hour time frame, 30 minutes time frame, 15 minutes time frame, you're going to be able to identify the same pattern, right? Now, another thing I need you to consider as well is the types of retracements or pullbacks that we have, right? With the way the market moves, after every big move, there's a correction phase or a retracement, and then there are two types, right? It's either the market is moving sideways and then eventually breaking up to the upside, or the market is having a deep pullback and then continuing back to the upside. What I'm going to show you today is how you can capitalize on the market when it is moving sideways, right? I'm going to shoot another video later subsequently and show you how you can also capitalize on these movements as well, but the concepts are pretty much the same, and then with any of them you can be able to catch insane amount of pips on a daily basis. So now that we have established this fact, let's move right onto the chart and see how we can apply this on the chart. So with gold here, you can clearly tell that gold has been in a downtrend for some time now, because you can clearly see that I'm making a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So with the way structure works, once you're able to identify the trend, you know that after a swing, we expect a retracement. And then after that retracement, we expect the market to have a new swing to the next level, until of course there are changes or there are signs for a change in structure. So what we want to do is to find ways to trade this movement right here, or this movement, or this movement. It's as simple as that. So once we go on the daily time frame and we identify the trend, obviously we are not going to take our entries on a daily time frame. This is where the lower time frame comes into play. So for this example, I'm going to try and teach you how you can just be able to trade this move, for instance, where my rectangle is. So when you go on the lower time frame like the 4-hour time frame, you realize that just as I explained in the beginning of the video, you see that the 4-hour time frame as well is made up of a series of lower lows, lower highs, lower lows, lower highs, and so on and so forth. And then once again, we are not going to take our entries on a 4-hour time frame. This is where the 30 minutes time frame comes in. So let's go back to the 30 minutes time frame. So on the 30 minutes time frame, you can clearly see that it's also making a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and so on and so forth. So what you want to do is to be able to identify the recent lows and recent highs in the market properly. So once the market makes a move and it starts to pull back, you have to mark this level as a recent low, and then once it starts to reverse as well, you mark this level as a recent high. So as far as the market keeps bouncing off these levels, you're going to find trade setups until of course it breaks out to the next key level as well. So I'll show you practically how you can do that, right? So with this example, for instance, you can see that the market dropped all the way right here and decided to reverse right here. Then it came back down, went back up, and came back here, and then went back up as well. So immediately the market made the first move. All I have to do is to pick my horizontal ray, put it right below this low. Also, once the market goes back up and starts to reverse as well, I put a horizontal ray here as well. So these are my first two highs and lows. So now the whole idea is to wait for the market to come and tap into any of these zones, right? So once the market comes here, I can make a speculation for a sell. Once it comes all the way back down, so I can make a speculation for a sell. Nonetheless, you don't want to get ahead of yourself. You want to make sure the market actually comes and sits on the zone. You don't want to work with assumptions here, right? So you can see that from this example, the market didn't come here on the first attempt. Just use this level as a retracement and it starts pulling back. And then from the concept that I just taught you, right, it makes this level as well a very valid key point or trading point. So you want to put your horizontal ray here as well. Now you see the market coming all the way down here, hasn't get to this level, and it starts to retrace us. So this is where it gets interesting. It comes back, then it comes all the way back down. Then we have your first attempt for a trade setup, because over here it sits clearly on the previous low. So once the market comes back to the previous low, you want to read into your entry criteria, which I'm going to speak about in a few minutes. Then you look for a position for a buy as well. So you take your buy trade right from here, put your stop loss right below the range, right? Put a stop loss right below the range. So over here, this is where it gets a little bit interesting. So for this setup, for instance, this low is not so far from the previous low, and with the way the market moves, sometimes you can decide to come here and retest this level instead. So sometimes, to be on the safer side, you just want to put the stop loss right below this recent low as well. But if this recent low is far off from this one, then you're better off putting your stop loss right here. So you put your stop loss here, target these areas for your final take profits. I said final because if you look right here, you can see that this level is also a turning point, which is also valid. So it means that when the market comes here, there can be a reaction for a sell as well. So this place can be your first take profit or your take profit one. When it gets there, depending on what the market does in this zone as well, you can either take profit or allow the market to come all the way back to your final take profit. So there you have it. We already have one clean setup. Once the market gets here, we didn't get a trade. It gets here as well, we didn't get a trade. But what did it do? It comes all the way back to this level right here, our first or our initial high, and then it's a rinse and repeat process really. So right from here, you just want to look into our confirmations for a sell as well. Take your sell, put your stop loss right below the range, and then target these lows for your final take profit. Now when it comes to this is where it gets interesting. If you are taking sales, remember that we are selling in direction of the trend, so you want to be a little bit ambitious because you don't know when the next break is going to come. As you can see clearly here, the next break can come. And also one of the signs you want to look out for the next break is that when the market has retested its level severally. So we can have the market testing here for the first time, second time, and also the third time. Most often than not, once the market retests a level for a very long time, the next move is going to be the breakout to either the downside or the upside, depending on the structure of the market. So that's how come after our second trade, right after our second trade, the market decided to break this low and then form a new low. So it is as simple as that. Now when the market breaks a low, what you want to do is to allow it to keep going. It's not going to go down forever. At a point, it's going to start to reverse again. So once the market reverses, you can mark that level as your new low as well, and then it's a rinse and repeat process really. And once you are able to identify your new low, you wait for the market to create a new high, and usually once the market starts to retrace, it uses the previous low as its new high. This is what some people like to call the break and retest, but this is the cool concept around this. So once again, you just mark this level right here as your previous high, previous low, and then you keep following the same procedure just as I taught you in the other one. So you're going to just keep marking the zones as well, marking the zones, find your trade entries. Some of them are going to be smooth, some of them are not going to be smooth. It is just the way the market behaves. So there you have it, guys. This is one of my simple day trading strategies that I use that is still effective till today. I have other ones that I'm going to show you from time to time as well. So if you like this kind of content, make sure you click on the subscribe button, like this video, share this video. Let me know in the comment section what you have learned, and if you want me to continue with this kind of content as well. Also, you want to click on the link in my description to join the Rick FS community, where I drop insane trade signals and also forex education contents like this one. You also want to click on the link in my description to join my recommended broker XNest. Follow me on Instagram and on Twitter at Rick__FX, RICK__FX. So that'll be it for this video. I'll see you in the next one. Peace out.